Well, good afternoon. Welcome to the Senate Revenue. We'll call this meeting to order. Judy, will you please call the roll?
Senator French,
Here.
Senator Ide,
Here.
Senator McEwen,
Excused?
Senator Pappas,
Here.
Chairman Biteman.
Here. Okay, first bill up for our consideration is Senate File 159, Stop ESG, Eliminate an Economic Boycott Act, sponsored by yours truly, Senator Biteman. I will walk you through the bill as quickly as I can. I know there's a lot of people who would like to share their input on both of these ESG bills. Obviously, the first one we're going to deal with is the Economic Boycott Act elimination. An act relating to the administration of government requiring parties to state contracts to certify that they do not engage in boycotting or discrimination as specified, providing definitions, some findings, and applicability, and providing for effective date. So I'll walk you through. The first thing we did is I wanted to insert legislative findings, and I know a lot of people don't like them, but for there's places for them, and I think in an instance like this, it's important that we understand what the bill is aiming to do, what the legislature is intending to do with this legislation. In case it goes to the courts, it gives the courts guidance as to what our frame of mind is. So if you notice on page 2, we start with the findings. The legislature finds that numerous essential American industries, including fossil fuel production, agriculture, timber production, and firearms, are being targeted for boycotting, divesting, and sanctioning by large corporations and public and private institutional investors. It goes on to say the goals of these colluding parties is to starve targeted legal industries. I repeat, legal industries of capital, restrict their productivity, and redirect that capital to favored industries. These parties are working in concert with many state and federal lawmakers and regulators, as evidenced by new climate disclosure rules. Go on, I'm not going to read this verbatim. Number 6, banks and insurance companies are increasingly denying financing to creditworthy companies to market their environmental credentials to the detriment of consumers. And we go on through. The bottom line is this. I brought these two bills because I've been trying to stop this economic warfare that's been taking place against Wyoming's interests, specifically fossil fuels, firearms, and our ag industries. You've got a conglomeration of very wealthy, very powerful banking leaders that control trillions and trillions and trillions of dollars under asset management that are bypassing the legislative process to implement their net zero goals, their climate change agenda, implement basically the Paris Climate Accords, doing all this by circumventing the legislative process. It's very important that we bring that to your attention, that those, although maybe worthy goals in some people's eyes, it's not going through the right process. And I will assert to you that this whole idea of stakeholder capitalism that we hear about is not capitalism. It is anything but capitalism. Milton Friedman would be rolling over in his grave right now if he saw what was happening to our economy. So as we go into the definitions, page 5 talks about what a company is, what an economic boycott means, which gets to the heart of the bill. Going on to page 8, contracts with government entities, requirements and exceptions. This is the heart of the bill. So this act means Wyoming statute 95401 through 404. So no governmental entity shall enter into a contract with a company for goods or services unless the contract contains written verification for the company that the company, A, does not engage in economic boycotts, will not engage in economic boycotts during the term of the contract, and this section shall apply to only contracts that are between, and this is a placeholder on page 9, Romanet 1 and 2. These two are placeholders. I'm open for debate on these. Between a governmental entity and a company with not less than 10 employees, and 2, for a value of not less than $1,000. I set those pretty low, but we can certainly talk about those, regardless of the number of companies who are parties to the contract. 95404 at the bottom of page 9 and top of page 10 talks about interference with state contracts. So no person shall take any action that penalizes or threatens to penalize any financial institution for complying with this act. Goes on, provides instructions to the Attorney General and different legal remedies. Section 2 says this act shall apply to all contracts entered into on or after the effective date of this act, and this act is effective July 1, 2023. The fiscal note says non-determinable. So as that is the bill committee in a brief nutshell. Hopefully I explained it coherently. I'll stand for any questions from the committee as to what this bill does or doesn't do, why we need it. Well, while they're ruminating on that, I'll open it up to agencies. I see the treasurer's here. Does the treasurer have anything to add on the Economic Boycott Act? Or anybody from any of the agencies? Okay. Actually, can you come up to the mic? I didn't realize you're gonna have so much to say. We gotta comply with some open meetings laws here. For the folks out there in the digital world.
Yep, Mr. Chairman, we're here more for 172 than this one.
Okay.
I think you guys know my stance on ESG and the association of the SFOF. There's some situations that, whether it's, I'm not sure, I haven't read this particular bill, but 172, that has some things that I'm already doing that, because we have a program that says Our Money, Our Values. We've got 23 other states that are involved in that. And we're trying to address this ESG, and we're trying to basically get all of the proxy votes from all of those states in there to address it at the board level. And that's kind of where our push has been. And I want to make sure as these things go through that it appears that we've got some prohibitions about what we're doing right now in that area, and we need a clear understanding. The contracts, I think that's more the general contracts for the whole government. I mean, we're wrapped up in it as far as one small agency, but yeah, I hope that somebody from A&I or somebody else is here to explain their concerns.
Mr. Treasurer, while I have you up, do you have contracts with the likes of BlackRock, Vanguard, State Street? Because I believe this would probably affect that.
Yeah, we have contracts with BlackRock. There's two areas there. One is a private equity, and that's a 10-year contract, and they're doing great as far as the returns. The first 2 years were 54% in the first 2 years, and we keep an eye on the type of. We have input into the type of, I guess, private equity ventures that they move into, because we got a seat on the advisory board there. Okay. And Patrick is here too, and so he can speak a little bit more on that. We do have one other one, and Patrick can talk, I think, to that. And what I'm hoping to do is just make sure our relationship with SFOF is still able to go forward. And I think Patrick has some other things on 172, but you're on the other bill now. So I think Patrick can go into the concerns that we have with both these bills as far as some restrictions. Thank you.
Okay, thank you, Mr. Chairman. Mr. Fleming, it's a good segue to you, sir. Do you have anything to add?
Yes, Mr. Chairman, my name is Patrick Fleming. I'm CEO for the Treasurer's Office. And question for you first, Mr. Chairman, members of the committee. Would you, because the crossing between these these two bills, because of the contracts that we would enter in with any of our managers, with our consultants, cross between the two, would you prefer me to comment on both of them at the same time? Because it's kind of hard to differentiate the two. So a little clarification, please.
I think for the purposes of just doing one bill at a time, these two bills, I did break them up separately to not violate the single subject requirement. This deals with contracts. The next one will deal with fiduciary responsibilities and basically specifying proxy voting requirements. So we're voting our shares. So I'd like to take them separately, Mr. Fleming, if possible. So
yes, Mr. Chairman, I'll try to limit my discussion to those.
Okay.
So first off, I apologize for not being there in person. I'm out of the state, but I do want to comment on some of the potential unintended consequences that we might have here. So I am not an attorney, but from the two attorneys that I spoke with about this, they felt that the verbiage would need to be clarified in this bill to make sure that who would be liable and under what conditions. So we enter contracts with all of our managers. We have contracts with our custodian. We have contracts with our consultants. So it really goes across all of the different entities. But right now, there is enough ambiguity in their understanding or looking at the bill that we reached out to everyone, and they feel that potentially they would not be able to do business with us if they are liable for 3 times what they are paid. And for instance, our IFC, Investment Funds Committee, they are not paid anything, but just a reputational risk. If there was something that came about that said the AG was suing them for breach of fiduciary duties, that would be extremely problematic. And so why could this happen? What would concern them with this? Let's just take an example for Johnson & Johnson, for instance. Johnson & Johnson, as you know, and this is true with many of the Fortune 500 companies, but J&J has over 250 subsidiaries in 60 countries. And what would be the possibility of one of these entities doing something that goes against this bill? They feel that it would be quite high. So in that instance, we would therefore, just to make sure and cover the bases that we would not do something against the bill, we would basically have to divest from most of these entities. The cost, we reached out to brokers who deal with buying and selling these companies in the secondary market. And right now, the cost is about 10% less than the market value. And if we did it during times of stress, they feel that it would be 20 to 25% discount for what is happening in the market, that if there was a lot of stress, that would fall back significantly. So what companies would we not be able to invest in? Vast majority of all of the companies that are in the Fortune 500. Mr. Chairman, I showed you Peabody Energy, for instance, one of the largest coal producers in the state. Their ESG statement concerning greenhouse gases, I'm sorry, that's 172, I'll pass on that one. But anyway, the cost to divest from this, depending on the liquidity, is somewhere between 250 and 500 million, just to divest from the private companies that we have. The secondary impact is some of the banks, for instance, if we were not able to use these liquidity providers, for instance, like Goldman Sachs, JP Morgan, et cetera. One manager we reached out to, they said they only manage only 400 million of a $25 billion portfolio, but they felt that the bid offer spread and liquidity provision that they would lose would cost us upwards of $1 million a year. Our custodian, JP Morgan, if they fell under this criteria with the contract, there's only really 2 or 3 custodians in the United States that are able to handle our size. With 25 billion, it's very difficult. it's unlikely that they would be able to work with us under the current consideration. We would probably have to go with a prime broker in Cayman Islands or Channel Islands or something that would have more legal protection. Our SLIB members, I'm not sure, how they would feel about this, but I know the IFC members, I've reached out to a couple of them that are very concerned. Bottom line on it is it would probably cause us to sell just about everything that we have other than US Treasuries and certain companies that we know do not have the ESG statement that we could manage internally. But Mr. Chairman, you make a great point. When you're talking about capitalism and what's going on, I do not want to come across and say, hey, what is happening makes sense. I just want to make sure that everyone understands our policy right now states that we are looking for the highest risk-adjusted return. And if our managers are not buying or investing in companies that have a great risk-adjusted return, then that is an issue for us. And we would never hire a manager who would tell us that we are not going to invest in a exploration and production company, a coal company. For instance, you mentioned BlackRock. I'll just use them as an example. BlackRock owns almost $300 billion in carbon producing companies. They manage money for us where they're investing. I just looked at their assets, what they own. They own a coal producing company now. So even though there are instances where people will invest with them, and I know their chair, Larry Fink, has made comments, what they are actually doing, and especially with us, is they are looking for the highest risk-adjusted return. So what their chair will state and what they're actually doing is very different. And that's one thing that we need to find out. And I'll close with one comment for all of you. The other side of this, which is actually wonderful, is that we are seeing opportunities now that I've never seen before. We are getting opportunities to invest in ESG type of instruments because other company or other asset managers are not investing in them. So for instance, we just invested, we're in the process of closing a deal of $83 million in a pipeline in the PRB. The previous owners of this are selling this asset at 57 cents on the dollar because they have CBM, coal bed methane. So many of these other investors are not willing to take this risk, and it's creating a great opportunity for us in the state of Wyoming to capitalize on that. We did the same thing with a power plant in California, et cetera, et cetera. So the flip side of this, which I don't think everyone realizes, is it is creating great opportunities for the state to look at these type of investments. So with that, I'll stand for questions.
Senator French.
Thank you, Mr. Chairman. Do you have a rough, if this bill passes and is signed by the governor, do you have a rough estimate at the cost associated with the state's investments?
Senator French, we have reached out to all of our major managers and given them a copy of the bill and asked them if it stands, if it was passed as it stands, how that would impact them. We have only had one who gave us a definitive answer saying, we think we could work around some of it, but we would not be able to invest in anywhere near the amount of funds. Everyone else has said that our attorneys are still looking at this and they feel, as I mentioned in my opening statement, that it's fairly ambiguous and they would need to clarify what type of remuneration they would need if there was an adverse impact on the AGs. But we know for a fact that only in our private credit alone, that would cost us somewhere between 250 and 500 million. That's just right now. The other side of this is, well, let's just use BlackRock for an example. They give us our risk management system. We manage the $25 billion portfolio on a system called Aladdin. And one of the deals that I struck with them as for the management is that if we were able to invest in the private equity, we got the Aladdin system for free. That is $600,000 a year. So ongoing cost would be enormous because we would not be able to invest in all of these other funds. So it would be a tremendous hit to our assets. Could we do it? Whatever you decide, absolutely, we will do. But it would come at a significant cost to the state initially, and then in our forward earnings potential would be significant.
Mr. Fleming, going back to the actual bill, on page 5 where it talks about what economic boycott means, I think it's important to point out, it means without an ordinary business purpose, refusing to deal with, terminating business activities with, or otherwise taking any commercial action that is intended to penalize, inflict economic harm on, limit commercial relations with, or change or limit the activities of the company because the company, without violating state or federal law, and then A, engages in production of oil and gas, fossil fuel-based energy, timber, mining, or agriculture, lawful use of firearms, and B, climate goals, and C, and D. So it's not just companies that, I think you're taking it a step way too far by saying this ropes in companies with ESG statements. I think what we're getting at is the people that are actively boycotting these industries that are lawful but vital to the state of Wyoming and vital to our way of life and our economy, and preventing our citizens from a lot of economic harm. I think you might be getting a little carried away. Do you have any comments on that before I go?
Mr. Chairman, you're absolutely correct on the ESG statement, which I slipped into 172, and I can take that back for the ESG statements of the Fortune 500 companies. But as far as the economic boycott, the concern that most of the entities that I reached out to is, are you doing an economic boycott because of the business model or because of what they're doing? So for instance, their concern is, for instance, if a bank did not lend to an E&P company in Wyoming because they felt that the risk did not warrant the return, then would that potentially put them in a negative position where the company could come back and say, the only reason you're not lending to me is because I am an oil and gas producer. And that is one of the differences, for instance, with HB 210, House Bill 210, where they differentiated the difference and said, if the company felt because of the economic benefit was too great, then that would give them the out. And so that, for instance, is the one part of the language that has many of these entities concerned. And as I said, they just felt that it was too ambiguous and not clear enough to warrant a definitive yes or no. What would actually fall within that category or statement?
Mr. Fleming, then I would direct you to page 7 and 8 of the bill, where it talks about ordinary business purpose means any purpose that does not further social, political, or ideological interests. A company shall be deemed to have taken an action or considered a factor that furthers a social, political, or ideological interest upon evidence of a purpose that is found in, but not limited to, A, branding, advertising, statements, explanations, reports, letters to clients, communication with portfolio companies, statements of principles, commitments, or participation in, affiliation with, or status as a signatory to any coalition, initiative, joint statement of principles, agreement. So if you're part of the Net Zero Alliance, if you're, in your Climate Action 100 plus members, I think that's what that's getting at. That doesn't, I think your argument of the bank looking at the financials and then worried they're going to get caught up in this is kind of a red herring.
Mr. Chairman, please do not shoot the messenger. These are the statements that the people we reached out to. This is not anything to do with me. I want to be very clear on this. I'm just saying these were the comments from numerous people that we reached out to and trying to get back an answer before today, which, as I mentioned, there was only one, PIMCO, that gave me a definitive, and the rest are still looking at it. But these were initial comments, and as they said, they did not feel that it was clear enough from their attorneys to decide whether or not they could work with it within the guidelines.
Okay.
That's all I was stating.
Thank you, Mr. Fleming. Okay, any further questions for Mr. Fleming in the treasurer's office? Yeah, Senator Ide has a question for you.
Thank you, Mr. Chairman. And Mr. Fleming, thanks for being here today. Those are good comments you're making. Giving us some numbers, I guess the unknowns are what's in the future on what you're limited to get your maximum returns. Has anything ever been done to weigh this against what we were losing by playing their game, their ideological warfare on extraction industries, and just to see where we can see that, how's that going to balance out with what we'll lose on your guys' side of the equation, on your investment side, and what we could potentially lose just by shutting down all of our, our lifeblood of our state. Thank you, Mr. Chair.
Mr. Fleming.
Mr. Chairman, Senator, that's a great question. And that is the part that is very difficult to answer unless we know that they are actively not investing in a company because of their ideological reasons. And so if they are doing that, then we will not hire that manager. And we ask them every time we go through, if we want you to invest in these type of companies, will you do so? And if they ever say no, then because of their beliefs, then they're not a company that we will invest in. We just won't do it. And I'll use BlackRock again as that example, where they are actively pursuing and investing in these companies because we have told them to do so. As far as the cost to the state, as I mentioned before, this is actually a wonderful opportunity to buy some of these assets at a very cheap level. So as long as our managers will only focus on the highest risk adjusted return and others will not, this is creating an opportunity for the state to get a higher return than we normally would. So there's two sides of the equation. But if we are investing with a manager who will not abide by that highest risk adjusted return, then we have a major issue with it.
And that as a follow-up, I'll ask, because you did mention BlackRock a couple of times. I see the other side of it too. We say we allow them to play with our 25 billion. They're going to make money, obviously, and we direct them to invest in oil and gas companies. Well, the problem is, and this leads us to the other bill, which we'll get to, is they're voting our shares and they're putting people on the boards of directors of some of these fossil fuel companies who they invested in with our money, our taxpayers' money, and putting people on the board to get them to spit out ESG statements, like you mentioned, from Peabody, which is completely antithetical to their purpose. So they're not innocent in this situation. And I think that's what we're trying to get after is we're allowing you to invest all this money. We're the 17th, 19th largest sovereign wealth fund in the entire world. We have a lot of skin in this game, and we should be looking out for our interests. And I don't think companies like BlackRock necessarily are. They're making money, yes, but they're also doing their ESG. They're implementing their stakeholder capitalism and using our money to do so, and that's the problem.
Mr. Chairman, that's a great point. And the treasurer has been working hard on this and making sure when we're looking at voting our shares that they will never vote our shares. We can tell them which way to vote on different things. Now, if we have every proxy vote that we had to respond to, that would be a job for probably 2 or 3 different people. There are companies that will do that will make sure that all of the proxy votes are set, but we will not allow them to do so. And we do not, the amount of money that we have with BlackRock in their liquid portfolio that they could actually do something with is less than 100 million. The private equity is about 275, but the majority of that, they do not have the ability in any of those to vote the proxy shares. And as the treasurer mentioned, I am on the advisory committee to this fund, and anything that is passed, I have to vote upon and they have never even approached anything like that would preclude us from being involved or making a statement on those private equity funds.
Great. Thank you so much, Mr. Fleming, for great testimony today. Thanks for joining us via Zoom.
Thank you, sir.
Anybody else wish to testify on Senate file? What is the number of this bad boy? 159. Mr. Detail, you want to come up?
Good afternoon, Mr. Chairman, members of the Revenue Committee. My name is Travis Deti. I'm the Executive Director of the Wyoming Mining Association. And Mr. Chairman, my testimony kind of hits for both bills, so I won't get up here a second time. This is kind of for both bills to offer general support for the concept of pushing back. The leverage of corporate power through environmental, social, and governmental ESG standards to impose an ideological agenda on society is an alarming trend. And we believe that the state has an obligation to push back on the use of ESG investing to prop up policies that harm the state of Wyoming, undermine our core industries, raise prices, and lower the standard of living for all Americans. ESG discrimination in capital financing is a particular concern for the mining industry, and WMA members believe ESG legislation is necessary. Large financial institutions, in the best case, have slowed access to capital for fossil fuels, for mining companies, for projects and bonding, and in the worst case, completely cut off funding. Mining and fossil fuels are capital intensive, and access to capital is vital for these mining companies and their projects. Free market access to capital is necessary to operate Wyoming's core industries and should not be subject to the hindrance of activist shareholders and Wall Street bankers bending the knee to harmful progressive environmental policies. ESG legislation, such as the bills before you today, level the playing field, we feel. This type of legislation ensures that if a company or project deserves funding based on its merits, that it has access to without such stipulations as arbitrary social or environmental policies, including, in the case of the coal industry, coercing promises to exit its own industry in a certain period of time as a condition of funding. And this is indeed happening right now. I will relate one experience one coal company CEO has relayed to us that he had in New York City as he was attempting to get capital to expand his company's portfolio in the solid coal market. He told us that the CEO of a large financial institution agreed to give him the capital with the stipulation that he must state in the loan that his company would exit from coal in 10 years. So basically a coal company saying, we'll give you the money if you exit, if you stop mining coal in 10 years. This is discriminatory and it's un-American, and it's all in the name of advancing the agenda of eliminating coal from the energy mix. So we believe that in fact, ESG legislation similar to what's being proposed here today has passed with bipartisan support in other states such as Texas, West Virginia, and Kentucky, all states reliant on their extraction industries for revenue, for jobs, and other states are currently have similar bills working through their legislature. As the largest coal producing state in the nation, Wyoming should follow suit in assuring our coal and our mining companies always have a fair shot at access to capital without discrimination and a proverbial gun to their head. Mr. Chairman, I will say in another life, I had the honor of working on the staff of the late U.S. Senator Craig Thomas in Washington, D.C. And as staff, working for a member of a small 3-person congressional delegation, we saw it as our duty to work for the people of Wyoming every day to ensure our state, our citizens, and our core industries didn't get rolled. And we need to do the same thing here today. We need to push back and defend our way of life, and these 2 bills will help us do that. So we would urge the committee to vote to advance these 2 bills to the full body. We would urge you to push back. And Mr. Chairman, I would stand for questions.
Thank you, Mr. Deti. Any questions for Mr. Deti? Thank you, sir.
Thank you, members.
Appreciate you being here. Mr. Meyer.
Mr. Chairman, members of the committee, Scott Meyer on behalf of the Wyoming Bankers Association. I wanted to tell you that we neither support nor oppose this bill. I will commend the chairman. We've had some conversations, but I know that you've had several conversations with some of my bankers, and I appreciate that effort.
Thank you.
some things to consider as we're going forward with this. Your Wyoming charter banks do not support or engage in boycotts or ESG. That is something that other places that we don't have any standing to take action against. Your Wyoming charter banks don't do that. Your Wyoming charter banks want to be able to participate in any legal business to the extent that they have the expertise and the personnel. So to the extent that these banks may not decide to bank oil and gas because they don't have that expertise. Maybe they're ag bankers. And the same thing, oil and gas bankers don't want to deal with ag. So the banks want to make sure that they still have that ability to do that. I think we want to make sure that the committee and the legislature take into a lot of consideration the comments that were made by Mr. Fleming. That has been our biggest concern, is what happens with the state of Wyoming. We understand where you're coming from. We understand with our industries that we want to support as banking members and the customers that we have, that we do need to have some pushback. We just don't want to cut off our nose to spite our face. So that is one of the areas that we are working about. If I look at the bill, I've got just a couple questions and just to throw out for some thought. When I look at page 3 on line 12, it talks about banks and insurance companies. Again, as I mentioned, these are the large banks. These aren't your Wyoming charter banks. And so to that extent, I think that it's important to know that that's what your Wyoming charter banks are doing. When I look at page 5, down there, starting on line 16, we talk about what's an economic boycott. And without an ordinary business purpose, refusing to or dealing with the intent to penalize. I think this gets a little bit vague. Your Wyoming banks want to support their customers. And if they have a very good customer that they want to support, they will do so. So what does that mean when we sponsor or we make a donation to an organization that does not fit into the ESG model, of the anti-ESG model? What if it's an organization that says we're having a fundraiser or whatever and they've been a great customer? Banks will support that. And that's what we want to be able to still do. I'm not sure with that language down there on line 19 says intended to. That very well may be giving us the protection that we need, because they're not intending to do any boycotting or ESG, but they may be wanting to support an organization like an all-women's activity or something like that, that is something that the bank really wants to do. I guess also then when you get over to page 7, starting on line 10 and moving down there, what is an ordinary business purpose? And there's some discussion in that. I'm not sure exactly if this needs to be fleshed out a little bit more, or maybe it has to go through some kind of rules or what have you, but starting on line 17, branding, advertising, statements, explanations, reports, letters to clients. I'm not sure what that means, but I would probably say that needs to be a corporate letter of some sort, because if somebody works for a bank, I'm not sure that would really apply if that person really had their own personal issues and their own preferences. I think, like I talked about, starting over on beginning of page 8, again, that sponsorship of events. If I have a bank that's in Jackson that wants to support a Pride event, does that mean all of a sudden now they are boycotting or they're supporting? They're probably supporting their customer. Doesn't mean the bank is taking that position, but that's what they're trying to do. So I don't know where you draw the line as to who they can support and who they can't. What is this participation? What is the affiliation? How does that work? And then I think going back down to the bottom of page 9, beginning on lines 19 through 21, where you talk about economically practicable manner, I think that does give a lot of banks the cover. And it does, I think, give the state treasurer some cover, because it is important to us to make sure that we don't cut off our nose to spite our face. So I commend you for putting something in there that essentially gives the state treasurer and his staff the ability to work through that. Other than that, Mr. Chairman, I got one more on page 10, beginning at the top of the page, starting on line 2, subparagraph area. It says, no person shall take any action that penalizes or threatens to penalize any financial institution for complying with this act. I'm not sure that really means anything because the banks are so heavily regulated by both state and federal that regulators will dictate what happens with the banks and what they do as far as what actions they take. Other than that, Mr. Chairman, like I say, we neither oppose nor support it, but we certainly are here to answer any questions.
Thank you, Mr. Meyer. Any questions for Mr. Meyer? Yeah, go ahead, Senator Ide.
Thank you, Mr. Chairman. Thank you, Mr. Meyer. You made that statement a couple of times on you neither support the bill or against the bill. I mean, I can sort of draw some of my own conclusions on that, but can you be a little more specific on why you would not support this bill? If there's something in here specifically that you don't like, that we can sort of massage and figure out if there's something we could perfect on this to get the bankers behind this a little more. Thank you.
Mr. Meyer?
Mr. Chairman, Senator Ide, I would tell you that our biggest concerns sometimes are what I'd mentioned here, some of the language, that we would make sure, we'd have to make sure that we understood where those banks are. And as has previously testified by Mr. Fleming, I think those are real concerns. And especially if you're a bank that happens to do with any investments. I mean, just because, you know, a lot of the banks maybe in Riverton, Wyoming or Powell don't deal that much with investments with the state. Some of the bigger members that we have do. And so I think it's important that we understand what that cost is and how that works. And so, Senator, my thought would be as long as we understood exactly where that is, then that would change our position. We just want to make sure that we support our resources in Wyoming. I think that the comments that were made by my good friend, Mr. Detai, are very real. And I think those are things that we definitely have to consider. And so we're certainly not going to turn our back to that. But we do have to make sure that the state is still functioning the way it needs to function. So.
Thank you, Mr. Meyer. I think to try to alleviate some of your concerns, you know, the reason that's going back to your point about let's not cut our nose off to spite our face. That's why I included the legislative findings. That's why we include language in there on page 10 about, you know, the Attorney General, if he has reason to believe that a person is engaged in this activity, that an investigation will happen. They'll look at all the different materials. They'll bring people in under oath. They'll ask questions. So your example of, you know, donating to a pride event or whatever, I don't think that falls underneath what this bill entails. And we're trying very hard to make sure that that never is considered, right? We're trying to catch the bad actors and not rope anybody else in.
Thank you, Mr. Chairman. And I do see that that's where you're going. And I said, you know, it's just kind of the language actually in there, but I understand what the intent is.
Okay.
You know, and also I'll point out one other thing that sometimes you'll have these big banks that decide that they're going to do whatever, and the answers or the responses that you get sometimes are, that's what the shareholders want. Most of the shareholders just want a return. I think there are just a few people out there that decide to take advantage of this and use it to the extent that you mentioned.
And one last question before I let you go on the, you know, this could be a possibly a good economic thing for Wyoming banks if these large multinational banks are engaging in economic boycotts of fossil fuel industries and therefore can't get state contracts. That opens the door for good Wyoming banks to maybe get some of those state deposit contracts.
Mr. Chairman, yes and no. I understand where you're coming from, and I do appreciate the comments even made by Mr. Fleming of what opportunities there might be out there. When it comes to state banking, there's just not a bank around that can handle the activity of the state of Wyoming. So disregarding for a minute the idea of the investments and where they go with that, there are only a certain amount of banks that can handle the activity that Wyoming does. Other states don't have that issue because they have bigger banks. Wyoming is just not that fortunate in that area. We just don't have banks that are of that caliber to handle it all.
Okay, thank you, sir. Any more questions for Mr. Meyer? Thank you for your testimony. Thank
Thank
you.
you, Mr. Chairman.
Any further testimony in the room before we venture off to Zoom land? Come on up. Welcome to Revenue.
Mr. Chairman, members of the committee. My name is Keith Riddle. I'm representing the Wyoming Outdoor Council. Thank you for the opportunity to testify today. When we talk about ESG, the relevant, that is, of course, the issue that is, of course, relevant to Wyoming's economy and tax base is climate change. That's not a new issue. It's been on the radar for many decades, and there is a wide body of widely accepted scientific evidence behind it. I'm not here to defend all elements of ESG and stakeholder capitalism. That's a relatively new phenomenon in recent years. However, we do believe that making an energy transition is warranted and in Wyoming's own interest. However, Wyoming may feel about measures to address climate change, a large and growing majority of our nation's populace believes that action is overdue. Most citizens will not tolerate energy price spikes or insecurity, but over the long run, they don't have to. Technologies are rapidly advancing and being deployed at scale that will facilitate reductions in carbon emissions as part of our energy systems. It will take time. There will be bumps in the road, but it will transpire whether we like it or not. So I just hope to bring that element into focus as this discussion proceeds. Wyoming exports most of the energy it produces, as we all know. We cannot force others to buy what we have to sell. When I graduated in college in 1991 in the Appalachian Hills of Western Pennsylvania, there was double-digit unemployment. It was coal country, and the decline of Pennsylvania coal was largely due to the rise of Powder River coal, which was underpinned by environmental regulations promulgated to address acid rain. These transitions occur throughout history, and it is in our interest as a state to recognize that reality and find a way to see our way through it. If we look forward, and it will be a long transition by all counts, it will take decades, but we won't be able to stop this transition. So in closing, I would just encourage that we keep in mind those realities and avoid measures that might cause more expense to our state, per some of the examples that have been cited today, than long-term gain, and focus on legislation that can help us diversify our economy and move forward. Thank you, and I'll be happy to take questions.
Thank you, Mr. Riddle. Any questions for Mr. Riddle? Seeing none. Thank you, sir. Mr. Moline, welcome back to Revenue.
Thank you, Mr. Chairman Committee. Brett Moline, Wyoming Farm Bureau Federation. This issue is becoming more and more important. My members do have policy against the ESGs, the detriment that'll, Mr. Detai said it very well. On his talk, I'd just take out the word minerals and insert agriculture. This is getting to be a more and more of an issue. Not just for the farmers and ranchers getting financing, but to be able to get our goods that we so sorely depend on, energy, other inputs. A thought that occurs to me that perhaps we might see some short-term losses in our investment portfolio. But taking a long-term investment look, I think we might see some gains. That if we support, we as in the state of Wyoming support our industries, those industries will stay more vibrant longer for a long, long time. And as far as firms not being big enough to handle our investment portfolio, businesses are pretty nimble. They will fill the need. If enough states do this, there will be a firm that will form to take care of the needs that we have. So again, as was stated, there's some good investments out there right now because of what some firms are divesting themselves of. We're able to jump into. I think as those opportunities come up, I think our short-term losses will be reduced, and I think our long-term gains will be strengthened more. And what I really appreciate about this bill and the next bill is you're taking a stand. You're taking a stand for the industries that built this state, maintain this state, and it's important to show that support to do what these bills do to make sure these businesses, these industries stay vibrant and keep contributing to not only the state, the nation, and the world. With that, Mr. Chairman, I'd sit for any questions you or the committee may have.
Excuse me. Thank you, Mr. Moline. Any questions for Farm Bureau?
Thank you for
Thank you,
this
sir.
opportunity.
Thank you for testifying. Okay, anybody else in the room wish to testify? Senate File 159, seeing none. Judy, who do we have on Zoom? Okay, let's go ladies first. Please introduce yourself to the committee. Turn your camera and your microphone on, please.
Hi, can you hear me?
Yes. Can't
Hi,
see.
my name is Sarah Bieber. I am a resident in Casper. I was in the switchover, so I wasn't exactly sure if you were talking to me. Is it my turn to go?
It is. Can you please turn your camera on if possible?
It makes my internet freeze, and so it gets really weird. I'm sorry.
Just go ahead and continue with your testimony then.
Okay. My name is Sarah Bieber. I'm a private citizen here in Casper. I am in support of both of these bills. We've seen it all over, especially with the anti-fossil fuel activists gaining seats, like you mentioned earlier, on the energy company boards and then destroying them and wreaking havoc within those companies. It is vital and important that Wyoming maintain our ag business, our oil and gas industries. They're very important to us, and we need to protect those as much as possible. It is an ideology. It is activism. It's not a place for business, in my opinion. If you had the CEOs of Exxon, Shell, and ConocoPhillips in a room that were saying we're going to reduce gas prices, and that caused a gas spike, they would be in handcuffs. It would be an antitrust violation. So now they do it. Now they can do it, and it's under ESG. So those things, I appreciate bringing these bills. Also, on a personal level, I sent the committee email earlier this morning that ESG is being taught, especially here in Casper, in our high schools. It's being presented as a positive influence to industry. It's being taught in the 9th grade, Natrona County High School financial literacy class. I feel like that's dangerous. I feel like that is an attempt to create ideology within schools. It's holding them as a captive audience. I know neither one of these bills are built for inclusion of education. I did notice that University of Wyoming on page 7, lines 6 through 8, it includes in government entities to include the University of Wyoming. I would really appreciate if we could add something to the effect of public education or the Wyoming Department of Education. That would be really great in my opinion, but I understand that these aren't built for that. Again, I support both of these bills tremendously, even if it's a fight down the road to continue battling on curriculum and what is in our schools. I will continue to do that. Having these laws in place will help that fight later down the road. That's all I have. Thank you.
Thank you, Ms. Bieber. I appreciate your testimony. And just a note on the educational piece. Yeah, that is beyond the scope of what we can do with these bills. I think that could be something that could be dealt with at the local school district level for now, and I applaud you for keeping an eye on that for us.
Absolutely. Thank you.
Thank you. Any questions? Okay, let's go next to Mr. Cole, Nephi Cole.
Chairman Biteman, members of the committee, can you hear me okay?
Yes, sir.
My name is Nephi Cole. I am the Director of Government Relations and State Affairs for the National Shooting Sports Foundation. We are the Firearms Trade Association of America. We represent 9,000 manufacturers, retailers, distributors, mom and pop shops, ranges, magazines, media. We are the professional side of the firearms world. Wanted to come here and tell you how supportive of we are of Senate File 159 specifically. I think it's important to separate these two bills, and part of that is because our expertise with the first bill relating to contracting is quite a bit greater than it is with the second bill, although we support both bills in principle. We're here to speak to the first and hope that the committee will look at them both differently because they are quite different. The first comment I would have is I think that the concerns about the first bill are largely overblown. And I think what you're seeing is big banks trying to buffalo Wyoming by waving capital in their face and saying, we have a certain amount of power, we have a certain amount of money, we're going to make your life more less profitable, we're going to cost you money if you stand up for your values. We don't think that that's appropriate. Bills like this already exist. They exist in Texas, they exist in West Virginia, they exist elsewhere. Specifically, a bill very close to what you're looking at now called the FIND Act, the Financial Industry Non-Discrimination Act, was passed in Texas 2 years ago and deals with discrimination against the firearms industry specifically. It's discrimination that we know, that we've seen, we have examples of it. It happens, it's real, it's cost our members millions of dollars, it's cost them businesses, and it is the result of several very large banks, we call them the mega banks, deciding that they will not provide financial services to members of disfavored industries. That began under a push by the Obama administration under Operation Choke Point. It continues to today, and it's been privatized through many of these policies and banks. I want to step back a little bit from that though, because there's a lot of detail we could go into on this, and I hope I have the opportunity to talk to you individually about that. But at its heart, this bill is extremely simple. It's very simple. This bill quite simply says, if you are one of these banks and you have a discriminatory policy, you must disclose it if you want to contract with the state. It's extremely simple. It's a check mark. These companies know if they have these policies because they are policies. They aren't who you decide to support at a different parade or whatnot. It is a policy of discrimination written in to your practices. The banks know if they do it. That is why only 4 banks failed to certify in Texas that they could continue to do contracting in their municipal bond market after the passage of the FIND Act. Those large banks know that they're discriminating. That's why they declined to do business there. Wyoming deserves to know if they are doing business with somebody that has a discriminatory policy written down and that is operating under it. The way this bill works, if a company does that, Wyoming doesn't try and tell them what they have to do. You don't go out and tell people they can or can't discriminate. All you say is, you must tell us. And if you do that, we as a state have the right to select a different provider. That is what this bill does. It gives you the opportunity, Wyoming, to select somebody that doesn't discriminate. This bill also has a very elegant out clause. If you do not have somebody who can provide the service that you need in a reasonable manner and a reasonable cost, Wyoming, you can still do business with somebody that discriminates. That's not cut off from you. It's in this bill that way, so that if you do have a massive state contract, you have some kind of a giant loan or something that nobody else can service unless it is one of those mega banks that also has a discriminatory clause, you can still do business with those banks, but you get to know that you're making that choice. That's why this is a simple bill. It's a good bill. It's a bill that respects that Wyoming, just like these banks say they have values that they want to stick to, Wyoming has values too. And Wyoming gets to make a value statement here. There's opportunity for Wyoming to work around any challenges. It's in this bill. We would encourage you to move this bill forward with a do pass recommendation. It's a good bill.
Thank you, Mr. Cole. Boy, couldn't have said it better myself. He explained the bill very well. Any questions for Mr. Cole? Any questions? Thank you, sir. Okay, who's next, Judy? Mr. Gagliardi, you're up next.
Thank you very much, Chairman. My name is Tony Gagliardi. I'm the Wyoming State Director for the National Federation of Independent Business. NFIB is a 80-year-old advocacy association dedicated to the advancement and opportunity to own, grow, and create your business. We take positions not because of my input, but we take positions because of the input of our membership through ballot questions. The ESG question has been out there, and our members, by over 80%, say such policies are necessary as what's contained in 159 and 172. They say such policies are necessary because financial institutions with ESG principles unfairly discriminate against fossil fuel producers, and their actions would likely drive natural energy companies to bankruptcy. Proponents argue fossil fuel companies are crucial to the nation's economy and financial well-being, as they generate billions of dollars in taxes and employ millions of people throughout the country. My members also add that energy companies are not the sole contributor to climate change and have taken steps to reduce carbon emissions. My members say such actions are purely political and go against the country's democratic values as they shift policymaking from voters to financial institutions. And because of that, we are in firm support of both bills. And I would just like to say ditto to your next bill.
Why, thank you, sir. Any questions? Any questions? Okay. Thank you for your testimony. We really appreciate you having here today. Okay, Judy, who do we have next? Mr. Isaac, you're up next. Please introduce yourself to the committee.
Wonderful. Thank you, Mr. Chairman, members of the committee. Appreciate your time. My name is Jason Isaac. I'm the director of Life Powered, a national initiative of the Texas Public Policy Foundation to raise America's energy IQ. And it's really tough to follow someone with the last name of Cole and then someone who talks about climate change being political, because they're both absolutely right. And the two previous testimonies were just fantastic. You know, I testified in front of the Senate Environment and Public Works Committee late last year at the U.S. Senate, and I mentioned that I live a high carbon lifestyle, and I think the rest of the world should too. That's truly where we have human flourishing. It's where we have economic prosperity. It's where we have environmental leadership. And that's something that's taken for granted here and really not known, as our polling indicates, in the United States. But there's been two things that have lifted people out of poverty more than anything else on the face of the earth, and that's capitalism and fossil fuels. And if there's an energy transition happening, it needs to be happening to get access to the billion people on the face of the earth in developing countries with poor air quality, poor health records, that live half the lifespans that we do. There needs to be this transition to get them access to American produced energy that's produced more responsibly than anywhere else on the face of the earth. But there's this globalist movement driven by the World Economic Forum, the UN, with their coordinated effort. They're a cartel that is colluding against American energy producers to deny capital when the EIA says that the demand for fossil fuels will increase over the next 50 years. So their investment strategies are not lining up with reality, and they're hurting American energy producers and hurting Wyoming. You know, I'm a little jealous of the bill you wrote because it includes timber and I think agricultural products as well. And when I wrote the first draft for the Texas model that passed in 2021, I served 4 terms in the Texas House from 2011 to 2019 and was tasked with this because companies were being denied access to capital to produce energy. And I took a stab at a first draft, and I included agriculture products and forestry products or timber products as well in the first draft. Ultimately, it ended with fossil fuels. And so if you boycott, divest, or sanction fossil fuels in the state of Texas, you're no longer welcome to do business with the state of Texas. And I had people after the bill passed said, when is Chase Bank and Wells Fargo and Citigroup, when are they closing all their branches? And I had to clarify that it doesn't limit their ability to do business in the state. It just limits their ability to do business with the state. So we had to clarify that this bill does not dictate how businesses operates. It just dictates whether or not they're going to do business with the state. Before the hearing started today, I looked at some headlines. I was trying to find some headlines to talk about Ukraine supplying weapons to Russia, but I couldn't find any news stories of Ukraine supplying weapons to their enemies. And I don't know why states would want to give taxpayer dollars and pension dollars to companies that are working against the best interest of that particular state. And that's the analogy that I think is a good analogy. We don't want to weaponize our enemies against us. It just doesn't make sense. And it certainly doesn't make financial sense at all. Well, Mr. Fleming mentioned earlier about BlackRock and their commitment to invest in fossil fuel companies, namely oil and gas. They've got a strong divestment position against coal. And that's why when I wrote the first draft of the bill, it said fossil fuels and not oil and gas for Texas. But they do have an investment, and they do have billions of dollars invested in oil and gas. And Larry Fink will boast about this on Mad Money with Jim Cramer, and talks about how we don't even need to get shareholder resolutions passed anymore. We're not even going to vote on those. We're going to give that to the treasurers and the comptrollers around the country. They can manage their votes. We don't need to do that anymore because we just have conversations with people, in the back rooms. And you mentioned when you were laying out the bill about this process, and what they're doing is they are averting a democratic process to get things done in the boardroom and in the back rooms outside of our democratic process. And we've written extensively on this subject over the last few years. I will say the motivation for our action that led to Texas came out of Wyoming. In 2018, Bank of the West said it was going to no longer do businesses with companies that produce, I think it was over 25% of their revenue from the production and extraction of fossil fuels. And where is Bank of the West founded? It's now owned by this French Brazilian conglomerate, BNP Paribas, but founded in the Western United States in states like Wyoming and coal producing communities, and communities that then moved on to producing oil and gas as well. And so to abandon your base was shocking to us. And Mark Gordon, then treasurer of Wyoming, divested of Bank of the West, which we thought was a good move. And it motivated me and motivated our team to do some research and ultimately make policy recommendations that are now the law of the land in 5 states. But one thing that is not the law of the land, and I quite honestly think it's treasonous, that when you have companies like Chase Bank that say they, in 2020, and this is on their website, Chase adopts Paris-aligned financing commitment, commits to carbon neutrality starting in 2020, and that they're going to help their customers navigate the challenges of meeting those commitments. That sounds like strong arming to me. Well, the last time I checked, the Paris Accord has not been ratified by the United States Congress. And I think it is absolutely treasonous that we have businesses that are forcing companies that they're investing in, like BlackRock has done with Exxon. And they voted with engine number 1 to replace 3 board members. These are activist board members at Exxon that wanted to decarbonize a business that produces hydrocarbons. You want to decarbonize a business that produces hydrocarbons. That's like defooding a restaurant or defooding a grocery store. It really doesn't work out too well for the consumers or the shareholders in the long run. But they did. And so they got new board members on. They aligned with the Paris commitment, so they were going to decarbonize by 2050. And what did Exxon do to decarbonize their portfolio? They sold assets in Southeast Asia, assets that they were going to produce oil and gas on. Somewhere, I'd rather an American company do it, but what did they do? They sold it to PetroChina. Who's a big investor in PetroChina? Surprise, it's BlackRock. Now, do you think PetroChina is going to produce that oil and gas as responsibly as Exxon is? I don't think so. I think we need American energy producers stepping up to fill the gaps around the world right now with this energy glut and energy crisis that we're seeing. And demonizing fossil fuels should not be rewarded with state business. So I'd love to share any experiences or questions that you may have about our efforts we've had here in Texas. And so I stand for questions, but thank you for the opportunity to testify. I stand in support as SF-159. Thank you, Mr. Chairman and members.
Thank you, Mr. Isaac. Question on Texas. You guys had a similar piece of legislation through. How did that affect your ability to invest your state funds? You heard the testimony from our treasurer's office. What was your story.
Yeah, so on the municipal side, and that's why it's important that the bill not only apply to the state, but the subdivisions of the state as well. On the municipal side, we did see that we lost some companies that were willing to write municipal debt. It went from 52 to 47, so barely a drop in the bucket of companies that are writing municipal debt. But what we've seen is we've seen a growth in the market and new market participants come to the market. They're saying they're going to put politics below profits, that they're going to work on fiduciary responsibility first and foremost. There's been a number of new companies that have started that are working with states around the country that want to ensure and really protect the pensioners, that there's dollars that they're entrusted with.
Thank you, sir. Good information. Any questions for Mr. Isaac? Thank you for being with us today. Appreciate your testimony, sir.
Thank you, Mr. Chairman. Thank you, members.
All right, Judy, who do we have left?
We don't have anyone else online.
Nobody left online. Okay, anybody else in the room before we close public comment? Okay, public comment is closed. Committee, what is your pleasure?
Move the bill.
Moved to pass by Senator French. Seconded by Ide. Discussion on the bill. Any amendments? Any suggestions, comments?
I'll just,
Senator Ide?
Mr. Chair, just a quick comment. That was a lot of good testimony online, learned a lot from all of the speakers. Kind of brings it down to your bill is even better than I thought it was to begin with. Just listen to some of that testimony. You know, it's almost voluntary to a certain degree on what the state treasurer can do. I mean, they can slowly wean themselves off of, you know, ESG stuff effectively, or not do business with them as they go along and try to, you know, get that out. I mean, I think we need to vote with our feet like all the political refugees do. We can't arm our enemies here, and I'm in favor of the bill. Thank you.
Thank you, Senator. Further discussion? Judy, will you please call the roll?
Senator French,
Aye.
Senator Ide,
Aye.
Senator McEwen,
Excused?
Senator Pappas.
Aye.
Chairman Biteman.
Aye.
Mr. Chairman, there were 4 ayes on Senate File 159.
Okay, Senate File 159 is passed the Senate Revenue Committee. Ladies and gentlemen, we have 2 bills left, and we're just gonna, I told the majority floor leader, we're gonna get our work done because we've got till Friday to get these bills out. We've got a couple more bills in the hopper for Thursday. So we're gonna keep working. I would ask that we keep our testimony to the point and short and sweet. And with that, I'll introduce Senate File 172, which is Stop ESG, State Funds Fiduciary Duty Act, an act relating to the administration of government, specifying requirements for the hiring and retention of investment managers, trustees, and fiduciaries who invest state funds as specified, specifying proxy voting requirements for investment managers, trustees, and fiduciaries who invest state funds, providing definitions, making conforming amendments. So that's what the bill does. Page 2 is in your definitions. What a fiduciary means, ties it in with existing statute. Fiduciary commitment, financial, the big definition on page 3 is financial. And I'll just, I'll point you to that fiduciary may be reasonably determined to have taken an action considered a factor with a purpose to further social, political, or ideological interest based upon evidence, again, like the last bill, which we'll get to. The point of this bill is to, again, ensure that those that we entrust with our money, our taxpayer money, are acting with a fiduciary responsibility of making a profit over politics, and that we're not engaging in any sort of activism or stakeholder capitalism with public dollars. So let's see, bottom of page 3. This is also within the definition of financial, which you can see. Again, eliminating, reducing, offsetting greenhouse gas emissions. These are the things that would violate that fiduciary responsibility. Divesting from, limiting investment, or limiting the activities or investments of any company are failing or not committing to meet environmental standards. Then we get into the S of the ESG with access to abortion, sex or gender changes or transgender surgery. E, which would be divesting from lawful firearms companies, components, ammunition, etc. Bottom of page 4, we define what investment entity means, which was the state treasurer, the state loan and investment board, the Wyoming Retirement Board, the Wyoming Retirement System, and any other entity responsible for the investment or management of state funds. Wanted to make sure we got everybody in that definition for state funds. Let's see, page 5, subparagraph B, in making and supervising investments of state funds, each investment entity shall discharge its investment duties solely in the financial interest of the beneficiaries of the applicable state funds for the exclusive purposes of providing financial benefits to the beneficiaries of the state funds, defraying reasonable expenses of administering the investment of funds, meeting other purposes required by law not related to the actions and considerations prohibited by this. So it's pretty straightforward. There's an out on page 6, line 15, subparagraph F, unless no economically practicable alternative is available. So we're not trying to, again, penalize our state officers if there's no other options. Again, on page 7, we're talking about, we want to get people to commit in writing that they're not going to take into any considerations other than financial interest. Talks about proxy votes and how they should be tabulated and reported. Again, the same Attorney General language that was in the previous bill, that they may, if they believe a violation has occurred, they can investigate and inquire through statements and look at writings. Conforming language throughout the rest of the bill. And section 3 specifies that nothing in this act shall be construed to impair or otherwise modify any contract entered into before the effective date of this act. So we're not passing a ex post facto law. And then section 4 is the effective date of July, the standard effective date of July 1st, 2023. Again, it's the idea behind this is we should not be slitting our own throats. We should be voting with our feet, just like the good Senator Ide said, and that's what the intent of this bill is. With that, I'll entertain any questions from the committee, and then we'll open up to public comment. All right, I know Mr. Fleming probably wanted to talk about, or Treasurer Meyer. I'll let the Treasurer's office weigh in on this first if they're interested. Do we still have Mr. Fleming, Judy? Welcome back, Mr. Fleming.
Thank you, Mr. Chairman. And again, I was saying this is in reference from what our managers have said. I'm not making an opinion on what is going on here, but just some of the concerns as far as, again, our goal of getting the highest risk-adjusted return. So in 172, for instance, I had mentioned about Peabody Coal, and in their ESG statement, they talk about the goal of reducing greenhouse gas emissions. And specifically on page 3, line 17A, eliminating, reducing, or offsetting GHG. So these are the types of comments from the companies themselves that would preclude us from being able to invest in those. And as many of you mentioned, do you take the hit on the return on that? That is not my decision. We will obviously do whatever you put forth. I'm just commenting on the limitations of our investments and what we would be able to invest in when you have a litany of Fortune 500 companies that have similar statements to this. Now, getting to your point when you talked about the out, if there was a clarification, I think, on that, I'm not a lawyer again, but if you said something where economically practicable, or if it was able to get us a higher return or something like that, then that would be an out that potentially we could do. But I just wanted to comment on some of those issues that we face from an investment perspective of who we would not be able to do business with. Thank you, Mr. Chair.
Thank you for that. And thank you for that suggestion on 6. Any questions for Mr. Fleming? Any questions? Okay, thank you, sir. We will keep this rolling. Any other public comment? Treasurer Meyer.
Thank you, Mr. Chairman, members of the committee. Wanted to go through and look at some of the things that were said that I want to get some clarification as to what I can and can't do, especially in the areas of proxies. And I guess I'll start over on, I guess it would be page 2 in the definition of financial means. And then going to the language that says by a fiduciary or trustee with any purpose whatsoever to further social, political, or ideological interests. Well, yes, socially, I'm against ESG, so I don't know if I do anything that would essentially, as far as having a proxy voters look at trying to put people on Exxon's board that wasn't for ESG being something that was socially or politically or ideologically motivated. So I want to see if the knife cuts both ways on this process, and that's something that I wanted to double check on, because the State Federation of Financial Officers has that program is, our money, our values. It basically says that we should invest everything in a manner of a fiduciary. You've got, I think, some different definitions about what a fiduciary is, as far as I guess I would say the standard dictionary definition of fiduciary. You've put some meat on those bones in different places. But wanting to make sure that, we can still go ahead, hopefully, with those things that we're trying to do with the SFOF to as I think one of the folks said, to work in the boardroom like the other side is doing. Because I feel that's where we'll get the biggest bang for the buck. I think these bills will make a lot of headlines, but I think that we need to fight them on other fronts too. And that's the front that I've seen they've had success on. And I think my other treasurers across the country have seen that. So we're trying to unite to the extent that we can, and hopefully bring in folks from the retirement systems, because they have a lot more money than I think the treasurers do. As far as that goes, they're a bigger fish in the sea, so to speak. Most treasurers don't have $25 billion, and a lot of them are just working in fixed income. Another thing that I'd wondered that to make sure whether or not, if an entity, say, supported the Planned Parenthood and gave, several tens of millions of dollars to Planned Parenthood, whether that would be an entity, whether or not we could or couldn't invest in, and just to make sure that we have that understanding as far as what the bill, what you think it says. So that's one thing. What I like. The other thing is over in section C of that same financial thing. It says any of the following actions beyond what state or federal law requires. In section C, it says not committing to meet environmental standards or disclosures, or failing or not committed to meet to meet environmental standards or disclosures. And I'm assuming that's operating in the law, that if you had a company that, knowingly violated federal environmental policy, that you'd be able to divest from that company without any retribution from these situations. And I'm thinking I guess when I read that, I put in woke environmental standards or disclosures, from my perspective, but I want to make sure that's the same perspective you guys have. Looking in Romanet 2 under subsection B, says to refrain reasonable expenses of admin and investment of state funds. I just wanted to know that, we work on a net return basis. We've got, some companies that charge us quite a little bit, but we expect a lot more out of them, and we've been able to do that. The one area here, and I'm not whining about this, I'm just want to state a fact, and that's over in the penalty section there. We have been working diligently over the last several years to develop relationships with especially the people in the private equity area. And those relationships are such as I'll recall a circumstance where I was talking to our private equity head, and he basically was telling a person that we were wanting to get involved with, some of the things that we'd like to do, and that person, it's a small knit club. And so I think those folks all kind of know each other. And he looked up some information on us, and we were doing business with one of his friends, and we were able to get into that particular, private equity firm. And you build up, I guess, a lot of trust, and it's going to be hard to maintain that trust if these individuals, basically get on the phone and start talking to each other and say, well, you can't work for the state of Wyoming anymore. And we'll probably lose a lot of those private equity people if we actually go into the area of fines. I applaud everything you guys are doing. I've been working on it from different angles, for the better part of the last 3 years. But there's some things there that you just will never get back that opportunity to get into private equities if we have the penalty clause in there for those managers. I think that won't be a short-term thing. It'll cease to exist, and that's where we've really been getting the large part of our funds. That's where we're really getting our return. Because we went to, and I've said this, you guys have probably heard me before, that we are nominated Turnaround Fund of the Year in private equities because we got 37 and 39% returns back to back. Those are going to be gone. You're going to be looking at 8% returns, and that's one of the larger growing parts of our portfolio. That's a long thing.
Can I interrupt real quick?
Yeah, you bet.
Can you explain why we would not get those returns? Is there not another company that could perform like that?
No, private equity, it's as I said, it's kind of a community, and the private equity people, the top producers, they know each other. They're from, a lot of them are from the same part of the country. A lot of them from the Chicago area, some from the Bay Area. But those folks that are in, the top 10% is where we've really been able to get a foothold, and have that relationship. Those things, I think, they'll just cease to exist, and that's unfortunate. Now, to your point, as far as the other opportunities that are going to come up, there is one firm that is presented in front of the SFOF that is specifically looking at doing the ESG investments. They've got 2 different funds. One is a social fund that looks into the firearms and the abortion issue and all of those. And these are companies that are vetted to make sure that they don't touch that negative aspect is what you guys are looking at. And then there's another group of companies that's in there that are been vetted, you know, for the ESG prospect, but I think your standards are even higher than what their standards are, because I think they allow things like we're going to continue to look at climate change, but they're not investing their money in it. It's more of a public relations aspect versus we're going to put our money, you know, in there, or we're not going to loan if they're financial institutions that they're not saying that they're not going to loan to our carbon industries. But they do have some language in there that is, you know, necessarily to us, I think it would be inflammatory, you know, but looking at that perspective, and I think this is a true statement from their language when they tout their product, was that if you have companies that aren't spending all of this time and money on either actions that they're not taking those good deals that we're finding in the Powder River Basin on pipelines, the 57%, they're doing the other side of it, you know, then those companies are going to actually probably do better than the companies that are throwing the good deals in the trash basket. And the same thing, if they're not spending a lot of their money on soft fluff issues that are social issues, that money's going to be going back to the shareholders. So it will, you know, if you gravitate toward those type of companies, in the long run, you should do, you know, fairly well in that. But it takes a long time to move, you know, $25 billion around. We moved around around $12 billion and added around 40, 50 managers. And we did that in about 2.5 years and made a big difference. But it's going to be hard there's not 40 or 50 managers out there that invest in this, in the way that you guys are wanting us to invest. There's probably less than a handful. I only know of the one that's actually specializing in it now. And essentially we try to put not more than 5% of our investments in any one manager, so we don't get too much concentration in one group of management style. And so we have different management styles, and that gives us the diversity that we need in the portfolio to weather the storm that we did last year. And this would probably reduce the ability of us to get as much diversification as we currently have. So, you know, we'll get through this storm, but the next one, it's going to be a little bit harder to probably weather. So there are some challenges. I just wanted to let you guys know what they are. I think the biggest one for the managers is probably the penalty, and for actually employing individuals, because I don't know I guess you can look at your guys' business. Would any of you be able to hire somebody if you're going to, if they made, I guess, a protocol faux pas that was going to cost them 3 times their salary? You're not going to have people lining up and to actually of the caliber that you would want to invest. And that'll be a long-term situation where, you know, it won't happen. It won't, because the people that can go away from our shop for 2 or 3 times their salary aren't going to hang around with that guillotine hanging over their neck or their pocketbook. That's just, pardon? Yeah, and IFC and SLIB as well, because they're reined into that. IFC members, I think that is a severe reputation risk. So you'll lose your financial advisors, and I don't want to say the sky is falling. I think these are just kind of of that one section. These are some of the things there. But I want you guys to know that, you know, we've been fighting this fight as much as we can, you know, and looking at some of the different, we go through, and this year we'll be going through that, and we'll go through looking at every one of our managers and making sure that they're performing the way they should. And there's a few of them, and a few of them I think would be, I'd call them sketchy in some of their areas of ESG or governance policies. But we wouldn't be getting rid of them because they're sketchy on those. We'd be getting rid of them because they're not making the money that we expect them to do and are not performing. And more likely than not, they're not performing because of the policies that they're employing. And those are probably pro ESG policies in many circumstances. So it's a natural, I guess, progression to get rid of the people that aren't doing as well. And I think I've told you guys this before, is that we did a study on the S&P 500 and what it returned versus an ESG ETF. And over the last 15 years, the S&P 500 outperformed that ESG ETF by 50%. So that's a huge amount of money. And so the people that we've got there, whether we define or have them tell us whether they're doing it or not, more likely than not, their returns aren't going to be in the top quartile. And as they slide down that ladder, they're going to show up when we do our standard sorting of the companies, and a lot of them are going to be falling off, with or without any legislation. But we do have to push back, and I think to the extent that we can push back and not negatively affect the state's investments, then I think it's reasonable. And it just doesn't seem right that every one of the big banks that can handle our $25 billion in the United States probably has a lot of ESG hair on it. They do. And if we're going to have a bank that doesn't follow those ESG things, we may have to go offshore. We may have to do Deutsche Bank, or we may have to do Nomura or something in Japan. Patrick was talking about a bank that might be out of the Cayman Islands. There's two big banks, and what do we do in our custodian in our in-state bank? Is that 800 million a day, or is it 800 million a month? And $800 million a day, as far as the state and local governments, that's what they do every day. Transactions, $800 million. We got some good sized community banks, but we don't have anybody that'll even approach that. And that's not even the big custodial bank, where we run through billions and hundreds of millions of dollars in different ways. And frankly, there's one of these outfits I'd like to get rid of, but excuse me, I shouldn't probably get into that.
You're getting cut off, Treasurer. Okay, well, with that, I'll cut you off just so you don't incriminate yourself, sir. Can I ask who your office uses for proxies? Is it ISS or Glass Lewis, or do you guys do it in-house?
Right now, we're not coordinated to use those. It's whoever the managers use, and I believe that SFOF through our consolidating or trying to consolidate our proxies, that there's going to be a new player in town. That's what my prediction would be within the next year or less. There'll be a company that's going to step up. That's going to be basically vote these proxies pretty much as the direction of what this legislation goes, because we've got the treasurers on these other states are on that organization. So I'm pretty sure that we're going to be able to do that. I just want to make sure that I don't have any roadblocks in here that we can't do that. And I think maybe sit down and see if there are any different things that prohibits us from getting in there. That one thing that says I can't be political well, and I can't be social, and that to a certain extent, I think I can say in every one of these circumstances, we're gonna be fiduciaries of the state's money and the beneficiaries' money. And if that means that we're anti-ESG, and if that means that we believe in the Constitution and that we believe in the rule of law, then, I think those two things go hand in hand.
Thank you, Treasurer. Any questions? Senator French?
Thank you, Mr. Chairman. Treasurer Meyer, have you gotten any negative comments or feedback about this bill from people that help you invest or want to invest in Wyoming?
I think Patrick, said that most of these guys are trying to run that through their legal department, but if we pay a manager, $10 million a year and we're going to penalize them up to $30 million, and we've got really good managers, they can pick up a job any place that they want to go. They don't have to take our money, so it's one of those things that you try to cultivate those relationships, and you try to make sure that you're the type of person that is going to be a steady investor. And so they know that when there's an opportunity, they'll call you, and that's where we're at now. We're not calling them, they're calling us. But if we get to a situation where they're going to get, potentially getting fined 3 times, they're not going to be calling us, and we're going to be divesting from them, and we'll never get on that train again.
Okay. Any other questions? Sure, Senator Ide.
Thank you, Mr. Chairman. Treasurer Meyer, thanks for coming and schooling us here. It's good information. You mentioned 40 to 50 contracts with outside investment or private equity, and it sounds like from what I'm hearing is all of them are compromised to a certain degree on ESG stuff as far as and then the second part of my question is I don't understand if there's penalties if you drop contracts and stuff like that, and if you have those contracts are sort of staged, is there some that come earlier and later? And that's my question. Thank you.
Yeah. I wouldn't say that all of them are compromised. That's I guess a mischaracterization of it. But I think that this bill changes our contract structure enough that we would have to renegotiate every contract. And what do we got? Total managers now? A little over 70. I mean, we put on another 40 when we did that $11-12 billion. But so it changes the relationship statutorily enough that we would have to renegotiate every contract. And we've got our old attorney that did our contracts is working for us as on a contractual basis. But if we were going to have to totally renegotiate all of our contracts, I'm not sure. I think the majority of them would probably drop off, especially with the penalty clause in there. I think we can get, the first bill that came through, the contract bill, I think that's not as problematic as a penalty clause, I think, for these folks, because, they get a penalty, they don't get their Christmas bonus. Yeah.
Mr. Chairman.
Yes.
Hi, I'm Dawn Williams, Deputy State Treasurer, and to that, Senator Ide, we don't necessarily, as the Treasurer stated, we don't know that all of our contracts would become compromised, as you said, but they would have to be renegotiated, as he said. But the problem, with ESG policies is they change quite often. They're kind of volatile. So if we are entering into contracts, and I think that's where the fear of the managers comes into, is if today, we can adhere to these things, something happens 2 months from now they're in violation of the contract, maybe on purpose or inadvertently, and that threat of penalty is significant for an inadvertent mistake. And I think that, and I just did want to reiterate what the Treasurer said about all of the fiduciaries that we have involved in state funds, board members, advisors, staff, your 5 elected officials. It's pretty far reaching, and I feel like that it does. No one's intention is to ever break the law, but when you get pulled over by the cops, you're still pretty nervous about it, even if you weren't speeding. So, thank you, Mr. Chairman.
Yeah, follow up on that, though. I think, again, we're getting a little fine here with what this bill, the bill is just simply saying each fiduciary shall take into account only financial factors when discharging his duties. That's all we're asking. And we're saying if you don't, and if you take into accounts, anything else into account as your primary, other than maximizing shareholder wealth, then we got problems. And then the penalties start kicking in after an investigation from the Attorney General, looking at all necessary materials, communications to ascertain that, yes, this was their main purpose was not fiduciary, it was something else, whether it was ES or G, but it's not F, which is financial, right? We want financial first and foremost.
Yeah, and I think that what everybody we deal with, their business is investing and making money for us. And our business is investing, hiring the right people and making money for you guys and the beneficiaries. But I think I think there are people out there that are in this thing that are essentially are kowtowing to the woke liberal agenda. And I've seen it on CNBC and I've seen it on every major bank, except for one. I didn't think just when you had a person of a certain party say, aren't you going to do this? And just like with condensation, that if you don't do this, you know, you're a very low individual and shouldn't be able to draw a breath almost. And you guys have seen those things on C-SPAN and in different places. And it's just that, and I think these people get pushed into having those stances, and then I don't know if any of them regret it. Maybe some of them really are buying into all this stuff. But yeah, the things that are happening to our state and other states as far as not getting, financing. I could see it when we had $35 oil, but now that oil is up there and it's opened up a little bit, as far as the capital. But yeah, I think that was when the oil prices was so low, that's when ESG was first starting rocking. And it was easy for them to say, we're not going to lend to oil producers because it really wasn't profitable and there's too much risk involved. But now, it's a business decision, and the business decision really should be to open up. The ones that really bother me, and you guys haven't hit on these people in there, and you might add them to them, that's all the rating agencies that come in and essentially are giving us a bad credit rating because we're simply an oil producer or a coal producer or both. And that goes right down to every one of our political subdivisions. And that to me is ridiculous because it doesn't really, there's no correlation between being an oil producer or carbon producing state and the ability to pay your bills. And they paint that with a broad brush, and you haven't really got into the rating agencies. That's really going to affect, it's affected political subdivisions in Louisiana. If I talk to the Louisiana state treasurer, you had a parish that basically, because of that credit rating, because Louisiana is an oil producer, they couldn't get a bond issued in a parish down there for, I think it was for infrastructure or something, And so this is running downhill, not just for energy producers, but for everybody that's a coal or an energy producing state. And the credit agencies have just jumped on top of that. And that's where I see that we can make a big inroad if we can just get a few board seats on some of these places that just get the conversation changed at that level, because that's what they were able to do. And I just we did a deal on AT&T when we pushed back on some of the things that they were doing in ESG areas, and we had total 368,000 shares of AT&T. Well, if you put all of the shares together of all of the treasurers across the state that's going to get into this thing, we're going to have millions and millions of shares in these different companies. And I think it's going to really surprise us and open some eyes about how effective that we can actually be in moving that needle. So
Thank you, Mr.
I'm
Chair.
excited about that. Yeah, whether you believe me or not, there's some things I'm not excited about in the bill, but other things I am excited about.
Well, we
okay?
want to help you do your job as best as possible and promote Wyoming's interests. And that's what this bill is
Well,
hopefully designed to do.
I think we can both get what we want without affecting the treasurer's office and the
Absolutely.
retirement system that much. But, I mean, I'm going to be, the life path that the retirement system have with their 457 plan, there's a lot of votes there that their BlackRock voted. And that's, and like I say, most retirement systems have probably a lot more voting power than a lot of the treasurers. So that's a place where we got to work on.
Okay, looking forward to working with you. Thank you. Any other testimony? Come on up. Thank you.
Mr. Chairman, members of the committee, my name is David Swindell. I'm the Executive Director of the Wyoming Retirement System, which is mentioned prominently in these bills. A few comments. I just want to remind the committee, I think you know we invest $10 billion on behalf of the retirement system, that the investment team is doing well. They're beating benchmarks by up to 2%. They've probably added $550 million over and above the benchmark in the last 4 years. So we have a good operation, and we do operate it for the exclusive benefit of the members of the system. I believe, Mr. Chairman, you're aware, and the committee is probably aware of various instances in Wyoming statutes that we seek to maximize total returns, net of fees on investments in the best interest of the retirement system. Another passage, 9-3408, judgment and care that a prudent investor would, that the fiduciary shall discharge duties solely in the interest of the participant and the beneficiaries for the exclusive benefit of providing benefits and so on. It's also in the Constitution. Article 19, Section 11, all monies paid into the public retirement system created by the laws of the state only for the benefit of members, retirees, and beneficiaries of that system. So we do not engage in social engineering or attempting to use our investments in any way other than to maximize returns net of fees for the benefit of our members. The problem that both of these bills do have, and we have some concerns, that it's difficult sometimes to distinguish ESG from traditional financial analysis or, quote, ordinary business purposes. I mean, one person's investigation of the board, the diversity of the board, is social engineering. It's another person saying, I just want a diversity of opinions because none of us are as smart as all of us. And they look at things like board composition and executive compensation and so on. In the end, I'll summarize our issues this way. One of our board members put it pretty clear. He's on our investment committee. I want to make sure that we should make clear our focus is simply achieving the best return consistent with a prudent level of risk, not advancing any non-pecuniary agenda. Drivers of both risk and return can overlap with things that some people associate with ESG. We don't want to be barred from good investments because of arbitrary language, nor do we want the investment staff to be burdened with writing memos to explain the difference. And I guess that would be one thought I might have. In the end, if these bills advance, it requires us to do certain things. We've got to report on proxy voting. We've got to review all of our contracts with our investment managers, and we can do all this. But if you're going to weaponize this, I could use some troops. I've been trying for 2 budget sessions to get an additional investment analyst, and it's still not in this year's supplemental. One thing that the committee could consider is to ask the appropriations to approve the agency request on our supplemental budget. We asked for 2 positions. We asked for an accountant. We asked for another investment analyst. Right now, they approved the governor's rec, which was just for the accountant, and I'm still fighting for that extra investment analyst, and that's the person that would respond and operationalize this for the bill. I do think that we're not going to have any real issues in complying because we don't invest with ESG, but we're probably going to have to prove it to somebody, and that's just administrative work. So I'd ask for some support from the legislature if this bill goes forward. Thank you.
Thank you. And thank you for
I
bringing
sit for
that to our
questions.
attention. Absolutely.
I'd say I stand for questions, but I think I'll sit.
I'll sit for questions. Any questions? Seeing none, thank you. Thank you very much. Mr. Obermueller.
Good afternoon, Mr. Chairman, members of the committee, Pete Obermueller, Patrolman Association of Wyoming. You guys deserve a medal for sitting through all of this. Really appreciate it. On the previous bill, didn't think it was necessary for me to get up and repeat everything that was said by some of the others. My friend, Mr. Detai. Can't tell you how heartwarming it is to hear the National Federation of Independent Businesses talk about how important fossil fuels are. So I didn't want to duplicate that time for you all. Mr. Chairman, on this bill, there's a lot to talk about this bill, but I want to just mention one of the things that's troubling for us in this whole space, and then I have an idea about the bill that hopefully improves it, and I would love to work with the committee on it going forward. First of all, we've heard a lot of talk, particularly in the previous one, about how banks respond and all of that, and I think it's just important for the committee to remember that we're awaiting word from the Security and Exchange Commission on their massive rulemaking that would require disclosure to the SEC, a climate disclosure. I won't bore you to tears about it, but essentially requires all companies of any size, even the smallest ones in Wyoming, to report on their scope 1, 2, and 3 emissions. Scope 1 is what you create yourself. Scope 2 is what your vendors and contractors create, and then scope 3 is, quite frankly, magical thinking, just what everybody uses everywhere, required to report. It's an unbelievable rule that will be nearly impossible to comply with. Then you tack onto it, my friend Mr. Meyer talked about it a little bit. The FDIC and others, they haven't gone down this road of requiring it, but they have principles on climate risk that boards and management should consider climate-related financial risks as part of the underwriting and ongoing monitoring of portfolios. That's an important statement because what are climate-related financial risks? There are two things in this world: physical risks, like if there's more floods or whatever as it relates to physical risk to an actual bank, and transition risks. And that's where it gets pretty murky, is transition risks. So those that are trying to push to the extreme in terms of greenhouse gas emissions, et cetera, want to make sure they tighten down that side of it. And then on the private equity side, I have a quote here from an NGO called the Private Equity Stakeholder Project, trying to work on it on the private equity side. It says, quote unquote, "These polluting assets are shifting from the public markets, where there's greater amount of regulatory and public scrutiny," like I just said, "into the shadows of our financial industry, where private equity usually operates." Growing up as the son of a CPA, there's one thing he's taught me is that the folks who work in the financial industry, often sitting in a cubicle or a windowless room somewhere, are the people who are making sure that what happens in our financial industry isn't in the shadows. So it's a little bit frustrating, but they're sort of after both. So I say all that to say that what you're doing is important for the same reasons that Mr. Detai brought up. What I want to mention about the bill what I want to mention about the bill, Mr. Chairman, is that there are some reasons, in particular related to ESG statements of some kind, and in terms of efforts of reducing greenhouse gas emissions in the oil and gas sector. There are reasons to do that. In fact, on reducing greenhouse gas emissions, every single one of my members, from my largest member to my smallest, is working every day to reduce our emissions portfolio, no matter what the emissions are. That's what they do, and in fact, we're the best at it. All of these various government imposed solutions aren't the ones that have worked. What's worked has been the technology that we've come up with, and to reduce emissions of every kind. So, with that in mind, Mr. Chairman, I just wanted to point out, if I can find it very quickly, page 3, line 17 and 18. So this is in your definition, Mr. Chairman, of financial. And you're basically requiring that there should be no decisions made for social, political, and ideological interests. And then line 17 and 18 say eliminating, reducing, offsetting, or disclosing greenhouse gas emissions. Mr. Chairman, what that calls to mind to me is, I think I know exactly where you're going. Where you're going is these sort of fringe efforts of eliminating it in order to force a transition much, much faster than the market is demanding, much faster. But if you look at the gas fields in Western Wyoming, what sets the gas fields in Western Wyoming apart from other places is that they're drilling for gas. That's what they want. In other places, the gas is an associated product. They're drilling for oil and they get gas. And that's all fine. It's just our guys in Western Wyoming can actually do so much more to meet a market demand because they're drilling for gas. And so if our friends in Southern California want to, virtue signal and pay us a premium because we do it better in Wyoming, knock yourself out. And Wyoming should be figuring out ways to invest in that kind of effort that differentiates our product. So all that said, Mr. Chairman, I think there's a way to do it in the sense that later in the bill, I think on page 5, line 14, you talk about supervising investments that it should solely be in their financial interests by providing, quote, on line 14, providing financial benefits to the beneficiaries of state funds. So I don't have the words for you right now, Mr. Chairman, but maybe in that page 3, we could have a qualifier in there that unless it meets those criteria down below in your bill, which I think is, unless I'm misreading, and please tell me if I am, I think that's what you're
You're
after.
correct, sir. And you bring up the good point, and Treasurer Meyer brought up the point too on the page 3. There's a gray area between having an open statement on actively divesting from fossil fuels versus virtue signaling, which you see a lot of in the oil and gas space. Unfortunately, I mean, you don't want to get picked on, so what do? You kind of act like the people that are picking on you, so they leave you alone. I get that.
Yeah.
So we don't want to rope in the virtue signalers with the people that are actively trying to destroy the fossil fuel industry. Is that what you're seeing?
Can't disagree with that,
Okay.
Mr. Chairman.
Continue. I'm sorry.
That's it, Mr. Chairman.
Okay.
I appreciate your all's work on this and thank you for hearing my thoughts about it.
Thank you so much. Thanks for your pointing out those two things. I'll definitely work with you on fixing that.
Appreciate that. Thanks, committee.
Any questions for Mr. Obermueller? All right, thank you, sir. Anybody else from the audience wish to testify on Senate File 172? Judy, is there anybody on Zoom?
No, there's no one with their hand up on Zoom.
Wow, all right.
Oh, wait a minute.
Uh-oh.
Just now. I'll bring in Jason Isaac.
Mr. Isaac. Floor is yours, sir.
Thank you again, Mr. Chairman and members. Jason Isaac, Director of Life Powered, a national initiative of the Texas Public Policy Foundation, standing in support of SF 172. I won't reiterate what many other people have said, but ESG funds, the 10 largest ESG funds, did lose double digits last year, 8 of them with losses worse than a S&P benchmark. So I think you've got a good piece of policy to protect pensioners and tax dollars in the state of Wyoming.
Thank you, sir. Do you have any comments on what you heard about maybe this bill being a little too broad? Is there anything then in this bill that's could possibly run people off, the good ones off?
No, I don't believe so, sir.
Okay, thank you, sir. Any questions for Mr. Isaac? Any questions? Thank you for being with us today. Appreciate it.
Thanks for your work and service. Appreciate you.
Thank you. Anybody else, Judy, on Zoom?
Yes, we'd have Randy Eminger.
Mr. Eminger. Randy, if you can turn your microphone and your video on and introduce yourself to the Revenue Committee.
Mr. Eminger, you need to turn on your video, your audio and video.
My apologies. I appreciate very much an opportunity. My name's Randy Eminger. I'm the Executive Director of the Energy Policy Network. We represent coal-fueled power that uses Powder River Basin coal. I just wanted to add one thing. I noticed most everything I was going to say has been already said, so I have not testified on SF 159.
I do know in some of the states, the bill's passed in 5 states. One of those states, Oklahoma, that I worked with very closely, the treasurer did testify that he needed additional funding to carry out the process going forward, especially on the fiduciary concerns and implementation. I believe there was a special appropriations wrote into the bill for an additional, I think, 300,000 or so to help with that process. I know Texas has a much larger comptroller treasurer's department, so they were able to handle it. But some of the other states have added additional funding to carry this purpose out. I did also want to say that it's not only the oil and gas and coal industry, but we've seen where BlackRock is the #1 funder in State Street of a number of the major utilities. I'm not sure with Rocky Mountain Power, but I know the 2 largest funders of American Electric Power, the largest utility in the U.S., is BlackRock and State Street, who both have a policy that basically says you'll sign up, or we agree with the Paris Agreement and Climate Action 100. We have seen since then that American Electric Power has gone forth working to close their coal fuel power plant. They have a plant closing next month, coal fuel power plant in Texas closing next month, another one in 2028. And so we see a lot going on between the major funders of the electric utilities and the electric utilities pushing forward to close their fossil fuel plants. That's all I had, Mr. Chairman. I appreciate the time to comment.
Thank you, Mr. Eminger. Any questions for Mr. Eminger? Seeing none. Thanks for being with us today, sir. Okay, Judy, does that wrap up the Zoom, or we got more on Zoom?
No, I don't believe we have any more on now.
Okay, public comments closed. Committee, what's your pleasure? Moved by Ide. Second by French. Any discussion or amendments? Yes, Senator Pappas.
This bill is, I know the premise and purpose of the bill, and I agree with it. I'm a little still uncomfortable about what its outcome will be to our state. I really think there's a lot of unintended consequences. I'll vote for the bill to get it on the floor for discussion. I don't know how I'll vote ultimately, but I really think it's got some big unintended consequences that I'm afraid may not be worth it to us. But I agree with the premise and the purpose.
Thank you for that. And I will pledge to you and the rest of the committee that I will get with the treasurer's office and other interested parties to make sure that we work out the details. And if we can't get them worked out, then the bill is not going to go anywhere. So we will we'll get this fixed and get it going through the process. All right, Judy, would you call the roll, please?
Senator French.
Aye.
Senator Ide.
Aye.
Senator McEwen.
Excused?
Senator Pappas.
Aye.
Chairman Beitman.
Aye.
Mr. Chairman, there are 4 ayes on Senate File 172.
All right, Senate File 172 is passed the Senate Revenue Committee. We still have Senator Larson? We do. I am so sorry, sir. That took longer than I thought. Yeah, please introduce yourself and your bill, and the floor is yours, Senator
Mr.
Larson.
Chairman, thank you, and committee, thank you. I bring you Senate Joint Resolution number 13. It is a joint resolution to amend the Wyoming Constitution to specify that the power and control of taxation and spending belongs to the legislative department and the executive department. It'll take a 2/3 vote with both houses to bring this forward, to bring it to a vote of the electors. So that's what I'm trying to do. We'll go ahead and go through the bill real quick. Like it said, we're going to bring in Article 2, Section 2, Control of Taxation and Spending. In the first sentence, the power of taxation and spending is reserved to the people and to the legislative department and the executive department. And the reason we put in the people in there is sometimes we have bond issues that the people may vote on, and so that could be another way of bringing in taxation. I better probably clarify Article 2, what it is. And it's just, should I have that opened? It clarifies the distribution of powers. So in that section 1, it says the powers of the government are divided into 3 departments. And so we're just bringing on down inside that into section 2, this suggestion. Going on to the second sentence, the legislature by law delegate local taxing and spending power to political subdivisions, provided that the power of taxation and spending is exercised by persons whose elected term of office does not materially exceed 4 years. And the whole idea is there that we are controlled by the people. These, the legislative department and the executive department, and even the cities and counties. And so we want to make sure those are the people that are controlling the taxing and spending. And the reason for the materially, I hope we keep that in there, was we don't want some lawyer to come and say, well, they're beyond, you may have taken office like January 1st and your office, just due to the calendar, you would be coming up to office in, on the 3rd. So it's materially, I hope you'll keep it in there. The next sentence, for the creation of the debt authorized by this Constitution, the legislature may, by law, delegate the payment of debt service and the establishment of taxation rates to accomplish this service to others as a ministerial task, and the judicial department may enforce the performance of these duties. The reason for that is we may have cities or colleges or counties or whatever that take on a debt, that do a bond or something. And we do want the judicial department to go ahead and enforce those. This is the key part of the bill. For the operating costs of the public schools, the legislature shall provide a formula for funding, which we already do, and that the formula is subject to judicial review for constitutional compliance, which we already are doing. So those should be okay with everyone. The next sentence says the legislature shall fund the formula by appropriation, and the amount of this appropriation shall not be subject to judicial review. So pretty much we're saying if the appropriation is insufficient to fund the spending provided by the formula, the spending shall be reduced by a uniform percentage. And so that would be uniform amongst all the schools and maybe in the Department of Ed. So essentially we're saying the legislature is going to have the power to decide how much is spent in the schools. The next section would just state how the proposal will be put into when we vote on the ballot and in the papers to inform our citizens of what we're trying to do. So that's pretty much the bill. I don't know if you have questions, but I'll sit here and take some.
Thank you, Senator Larson. Senator French has a question for you.
Thank you, Mr. Chairman. Senator Larson, can you clarify something for me? On page 2 at the top, line 6, the legislature may by law delegate local taxing and spending power to political subdivisions. does that mean that your local town can raise the sales tax, or the local county commissioners, can they do the same? Does that give them the power to do that?
Senator Larson.
Yes, thank you, Senator French. If it follows statute, I would say that is correct. They can't change the statute and bring up whatever tax they want. They could also bring a bond issue on things, but they would have to follow statute.
Mr. Chairman.
Is that
Senator Pappas?
Yeah, basically, it's really not that's not changing anything we do right now. We provide local taxing authority to the political subdivisions. So for instance, we can tell towns and counties they can tax up to 7% sales tax, right, with the additional pennies. And they can add one or not. For instance, in my community here, we have 6%. We could go another penny. So we give them that authority. But if we wanted to go 8 or 10%, we don't have that authority because the state hasn't given it to them. So there is limits, but we have given them some authority.
Have a follow-up, Senator French?
Yes, Mr. Chairman. But that has to go to the electorate, correct? If the commissioners and whatever want to raise the tax from our counties at 4% up to 5 or 6 or whatever, that has to be a ballot measure, correct? Okay.
Senator Ide.
Thank you, Mr. Chairman. Senator Larson, just reading this over, I like the bill. Just to clarify a little bit with me, taking it to the executive branch and the legislative branch, does this solve some of the problems of the judicial branch legislating from the bench, so to speak, on taxes? Thank you.
Senator Larson.
Senator Ide, that's the intent. Yes, that is correct. We want to make sure that they aren't the ones deciding how much we spend if we don't have the amount of money there to spend it.
Okay. Thank you, Senator. Good job. All right. Is there any public comment? Not a whole lot of people in the room left. We wore them out. Anybody on Zoom, Judy?
No, there's no one on Zoom.
Okay. Last call for public comment from the floor here. Okay, seeing none, public comment is closed. Committee, what is your pleasure? Moved by Ide, second by French. You guys see any amendments or anything we need to do to this bill?
Just a comment, Mr.
Quick
Chairman.
comment from Senator Pappas.
I understand the concept behind the bill. I don't agree with the premise that we should take judicial review. That's basically what this does. It takes the ability of someone to go to a judicial branch for relief. And that scares me a bit when we limit the third branch of our government. I mean, I see that happening in the world now with Israel trying to squash the judiciary in their country. I believe that's dangerous. And I agree that perhaps the judicial reviews we've seen have not been what we like to see, but I don't think removing the ability to do that is the way to deal with it. I think the way to deal with it is for us to change the basket of goods that we're going to do as far as education is concerned, and then fund it appropriately. If we don't think that we have enough money to do it, then let's just change let's change our program to fit the money that we have. And maybe we can come up with a legislative way where that is more flexible, because it's difficult right now to change the basket of goods. Maybe we could make it more flexible. I don't know. Again, we'd have to determine that with all the stakeholders, the schools and the education department and the board of education and everybody who's in education. But to me, to remove the ability for entities to access that third branch of government, I think is dangerous. Thank you.
So you're seeing that on line 19 where we talk about the legislature. The preceding sentence talks about the formula shall be subject to judicial review, but the part that gives you heartburn is the second sentence that says this, we shall fund the formula by appropriation, and the amount of the appropriation shall not be subject to judicial review. Is that correct?
I don't think anything should be barred from judicial review. I just think that that's how our government works. If the executive branch doesn't like what we do, they veto us, right? Or they have other methods. If we don't like what the other two branches do, we don't fund them. But then when we take away the ability for that third branch to do what it does, I just think that's dangerous.
Do you have a comment on that, Senator
Chairman,
Larson?
can I
Clarify
delve
that for
into
us?
this with you?
Yes, please, yes.
I guess I would say there is a way to remedy that already with, I want to call it the fourth branch, which is our public, our people that vote us in. If they don't like what we came up with an appropriation, then it's up to them to get us out of office. I think that's the main reason to make sure it's above on line 10, we said, that it's a 4-year deal that makes these decisions. So I want to kind of come back and say the people would have the control.
Okay. All right. Fair enough. Okay. Any further comment? Okay. Judy, will you please call the roll? Question being called.
Senator French.
Aye.
Senator Ide.
Aye.
Senator McEwen.
Excused, sorry.
Senator Pappas.
No.
Chairman Beitman.
Aye.
Mr. Chairman, there were 3 ayes and 1 no, 1 excused on Senate Joint Resolution 13.
Okay, Senate Joint Resolution 13 is passed the Senate Revenue Committee. That concludes our business for the day. The meeting is adjourned.
All right.